Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 25th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call, we learn more by welcoming criticism than by rendering judgment. You know, like everything else in life, arguments can be managed. When someone is expressing anger towards us or seems to be overly critical, we have but two basic choices out there. We can defend ourselves or we can learn from the conflict. Here's the key. We must always remember that nothing is learned if no one is listening. That, folks, is why we have two ears and one mouth. We always need to listen twice as much as we speak. Now, the cool thing is that every moment of our life, we are molding character, and it's our character that determines our destiny. Each day, you and I, we create all of the conditions that now exist in our life. That is, until we give birth to a new way of thinking. You know, the light bulb should go off the moment that we realize that we are not perfect. And I say thank God for that, because perfection, well, folks, it simply does not exist. In fact, perfection is the lowest standard that one can achieve. The reason? Because let's face it, it can't be achieved. Octavio Paz, he once said, there's nothing sacred except for the freedom to think. You know, without criticism, that is to say, without rigor or experimentation, there is no science. Without criticism, there is no art or literature, and without criticism, there is no healthy you. We learn more by welcoming criticism than by rendering judgment, for judgment can and will destroy friendships. It's our willingness to listen to another honestly and openly that helps us deepen our friendships. Yes, folks, we learn more by welcoming criticism than by rendering judgment. Well, let's go make some judgment about these markets out here. Right now, we've got the Dow futures trading off 78 points. S&P futures off 7.5, trading at 1676. NASDAQ futures up 3 at 3051. Russell 2000 down 4 points at 1039. King dollar down 21 ticks. And what's this? Gold is only up $3 right now. We got silver up 8 cents. That's trading at 2010. Currency market here looks relatively stable. For the moment, you got a little bit of movement in the yen, a little bit of movement in the euro out there. We'll take a look at those currency pairs and anything else that you'd like. All you've got to do is give us a call here at 877-927-6648. A quick peek around the globe. The DAX is off 100 points right now. That's off 1%. The FTSE off 38, down about 0.6%. In Asia last night, a sea of red. And that's what we've got going on here in the U.S. I expect that we have seen the high coming in the high really being tagged yesterday at 8 o'clock in the morning as the ES Mini got back up to that 1695. You know, if you listen to the show yesterday morning, this is the chart that I showed here. If you're listening on the radio or your mobile device at TFNN.MOBI, remember, you can always catch the archive of this show on Channel 9. And what we're taking a look at here, folks, I've described here for all of you listening, and we're taking a look at the ES Mini. And one of the best patterns, one of the coolest patterns, because you really don't need much in the way of technical training for it. All you need to be is visual, and we're all visual learners out here. And it was a matter of the fact that we had set up, or the ES Mini had really formed a sideways consolidation trading range. And those are beautiful things because you don't necessarily need to know which way it's going to break. You just know that when it does break, it's going to give you a projection, a price projection, equal to or greater than that actual consolidation box. Now, I drew this pattern at about 5:30 or 6 o'clock in the morning yesterday. It was included in my newsletter service. Explained to the clients exactly what to be looking for, a 9-point trading range, and said the upside breakout will take it to 1704. It looked like that's what the market wanted to do. That's the cool thing. It really doesn't matter what it looks like the market's going to do. All you want to do is sit back, and it's like your own fishing hole here, and let the market actually do what it decides to do. In this case here, the price got right up to the top of that, right up to the top of that trading range, that consolidation range, and then it went ahead and sold off. Now, the first clue that this was going to be a move to the downside was what was this wide-ranging bar as the market opened, not as the market opened, at 10 o'clock. At 10 o'clock in the morning, so 9:30 to 10, it was as the market opened. What am I talking about here? That wide-ranging bar as you were coming into the bottom of that consolidation area. Well, here's what it did, folks. I'll go ahead and blow this up. If we take a look at what the actual low yesterday was, came in at 2 o'clock in the afternoon, and the price point was 1677.25. Remember, the projection here was 1677. You got to cut me at least a quarter point slack out there because I was really rounding out there. Now, at 1677.25 at 2 o'clock yesterday afternoon, we had one of your favorite candle patterns out there. Let me get rid of the A to B equals CD, make it a little bit easier. You had a hammer candle, followed up by a bullish engulfing, followed up by another hammer candle that came in at 2:30. That said that this area here should have been a very good area of support. Well, that support, folks, it failed, just like sliced Kerrygold butter at 5 o'clock in the morning. The bulls were not around. They were sleeping in, I suppose, resting on their laurels. Now what do we have? Well, we had the market move down into an extreme oversold condition. Did you ever wake up in the morning? I don't know what time you guys wake up, but did you ever wake up and futures are down big and maybe you're short and you're like, oh, this is great out there, only to maybe a couple hours later see the futures travel back up? Well, look, just like you breathe, so does the market. The market is made up of you and me and all of the living organisms that are breathing out there. And if you take a look at the EKG, you've got your own personal EKG out here. In fact, I'm going to show folks how to use a different version of this EKG tonight. All of the subscribers to my newsletter service. In fact, if you have never tried the newsletter service, now is the time to actually do it. You guys go over to the homepage at TFNN.com. You'll get access to this workshop. This is one you don't want to miss out there. And anyway, let's get back to this. So when the market, you take a look at this relative strength indicator out here, it's measuring momentum. The momentum was doing what? It was pushing down. And it was pushing down. It got into that extreme area of a rubber band, and it has to work its way off. Now, sometimes it's going to have a slingshot effect, and it's going to go ahead and move all the way back up to the top. Well, the key here is going to be that candle that came in at 5:30. The top of that, 1676.75. You get to close above that level. Okay, that sets up that what can happen here is the market can move higher, can retrace higher, can continue to work off some of that oversold condition. It's been worked off here ever since, or it's been working itself off ever since that 5:30, 6 o'clock, 6:30 a.m. time frame. But that's why when you might take a look at the markets and see that they're down, and all of a sudden you see it start to come back, that's why it's doing it, because it just simply has to breathe. It's got to work off some of that condition out here. The markets, folks, there is an A to B equals CD down. It's going to be a doozy. Why do I say it's going to be a doozy? Well, if you just take a look at the retracement, if you come off that high from 8 o'clock in the morning down to that hammer candle, well, what was that retracement that we saw? We saw a dead cat bounce, a 0.382 retracement, the exact number 1684.25. What happened overnight was right at the time frame of 5 p.m. last night. It got up to 1684.50. It's why you want to be able to utilize these Fibonacci numbers. And it's picking out swing points. It's a relatively easy thing to do. You're looking for the most significant high, the most significant low during a move. Well, that was clear out here. The most significant high was the one that came in at 8 o'clock yesterday morning. The most significant low was the one that came in at 2 o'clock yesterday afternoon before we saw a bounce unfold. That, too, as you can see, when the hammer candle was being formed at 2 o'clock? Where was that relative strength indicator? Yes, it was. Right down in the oversold territory. It had to bounce just like it's doing here right now. The beginning of the move down has begun in the markets. That doesn't mean we can't get some bounces out here. We most certainly can. If we go take a look at the trend out here, the 120-minute chart, a little bit larger trend. This is the rising price channel here coming off of the June 24th low. So since June 24th, this trend has remained intact. You don't think the trend is your friend or is important? Well, guess what? Your friend just turned into foe out here. Why? Because coming into that session here at 11:30 yesterday, we saw a break of that trend with conviction, a push down into that 2 o'clock time frame, just as we looked at on the 30-minute chart, a little bit of a bounce higher, then a continued move lower out here. Now, one possibility is that we'll see a huge bounce. I don't think so with all the numbers that are out here. But one possibility we always have to take into consideration, when you break a trend line, when you break a price channel line, price can go back and test that area. If it does that, that says that price would probably move back into about the 1690-ish type range. It's at 1677. That would be a heck of a move. I don't expect that will unfold. The next area of support out here for the bulls is going to be this 200 exponential moving average, 200 period exponential moving average, right now about 1665 range. So that's an area for us to pay attention to. When and if that gets broken, that will spell curtains out there for all of the bulls, because what we will also see take place most likely is we will see the New York Stock Exchange give us the signal that the bears have taken control of the game. I don't have that number handy here. Well, I probably do have it handy. I just have to open up another spreadsheet or what have you. And I'll give you what that number is today, because you want to be paying attention, because now it becomes achievable and it is believable. And if at the end of the day, and it was the New York Stock Exchange, folks, that led the market down yesterday, and that was key. It led both percentage-wise, dollar-wise, on the way down. That gives you the better breadth of the marketplace out here, and that means that's what you want to be paying attention to and watching. Today, the number that needs to be hit, and this is an easy number, can do it in a heartbeat. If there are more than 270, if there's more than 274, that means 275 or more net declining issues out there. Guess who has control of the ball? And when the bears have control of the ball, you do not want to be on the long side. Or if you are, just make sure that your stops are very tight. I'm not going to sing that Basil song, but he will in about 2 hours or so. Right now, Dow futures off 78, S&P futures down 6.5. We get back from this first break. We'll go take a look at the commodity sector. We'll go take a look at light sweet crude. Looks like light sweet crude might want to do its own retracement. That would be a beautiful thing. 877-927-6648. You know, when we get back, we're going to take a look at all the stocks out here, many of the stocks in the pre-market, because we've got some that are popping and some that are dropping. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, we talked about that May 22nd date out there, and May 21st, 2012, because we talked about May 22nd, 2013. Well, all the folks who bought in on Facebook May 21st, 2012, they are happy campers if they are still in the equity, because they're going to get their money back here today. Right now, you've got Facebook trading up about 30%. That's up $34 in the pre-market here. No, I'm sorry, that's up a total of not $34, a total of $7.88 out there. It's trading at $34.50-ish out here. And if you go back to the actual IPO day, the IPO, remember the high of that was $45, the low was $38. The very next trading session, it went from $30 to $33. So we'll see if that's going to be some if it's heading into a supply line, what kind of accumulation might go on here. Facebook is going to move into that extreme overbought condition, though, right off of the bat. What Facebook did do here, and I had it on a buy list of mine. I was taking a look at this actual gap here that was in place from November 26, 2012. And as the equity, and that was an area that had been tested earlier. I'll go ahead and make this a little bit larger on my screen. I'll actually put a black line across the bottom of the screen. And as it had come back and it tested that area with 52 million shares, and that 52 million was going against 123 million from November 26. And as it was coming back in there, it was just starting to pick up volume on the way down. 58 million shares on May 24th, and so we backed away from taking it. 64 million on May 29th. But what I wasn't paying attention to, because I took it off of my list, was the fact that it was also really just coming down into the sign of strength from November 14th, 2012, 229 million shares. Now, the top of that was 2250. Didn't get down there completely. Got to 2267. Formed that little doji candle out here. Actually formed a three-river morning star. That was a bullish candle signal out here right here, these three candles as was coming into a sign of strength out there. So you had a nice, and then what it did was it actually had a little sign of strength on June 10th out there. So my bad for having taken that off of my watch list out there. In any event, other things that are moving here in the market, Baidu is up nice 17%, trading out at 132.60. TripAdvisor up 13%. They're trading out at 69.20. Under Armour up 6.5%. Hog, Harley-Davidson up nearly 4%. O'Reilly Automotive up 4%. Cabot Oil and Gas, that's up nicely here this morning. On the downside, we've got Western Digital off 5%. Cheesecake Factory having some struggles here, off about almost 5% as well. D.R. Horton down 5%. Angie's List off 5%. Equinix down 3.5%. Goldcorp off 2.5% this morning. Let's take a peek in on some of these equities as well. Let's see which one pops up on my screen here first. Here's one that's really going to be taking it in the shorts this morning. SQNM is the ticker symbol. It is Sequenom Inc., I believe. This thing is going to come all the way back to its original, well, I don't know if it's original breakout area. Yeah, it's original. It's all the way back to its lows. This thing had broken out back on, we're looking at August 2nd, 2012. The equity made a low of 265, which will likely be tested today, a high of 289. It was trading at, last time I looked, right around the 297-ish area. The volume on that breakout, nothing substantial, 5.2 million shares out there. So it is going to come back all the way back. We closed at 469 last night. So you want to talk about a haircut. That is a haircut. That's the kind of haircut you really don't want to have to pay for. Let's go back and see what else we've got here. We've got Crocs. What a Crocs that is, huh? That is getting totally hammered here this morning. That is coming back to its high volume low out here from October 25th. That's at the 1261. It's traveling at 1292-ish right now. So that ought to come all the way back and take a look at the lows of $12 back from November 9th of 2012. So that one's taking a big hit out there as well. You've got, what is SI? What's the ticker symbol on SI? I should know it, and I don't, so I'm going to skip right over it. Let's take a look at Goldcorp. We've had nice move here in the gold equities. Goldcorp here trading out right around the 2770-ish range, at least the last time that I had looked here. Now, 2770 is not going to do a whole lot of damage out to this equity. In fact, it's probably just going to try to close this gap. We'll see if that's it. The top of the gap is 2735 out there. Had some decent volume on that move up as well, which was 12 million shares. So we'll see what kind of volume is on this pullback here. Agnico Eagle was also out with numbers. AEM, let me see where that equity is here. So as we take a look at this, this was pulling back this morning, but really just coming back into the top of that June 28th candle. It's got 3.5 million shares. So there's going to be two equities on the gold side that we're going to want to pay attention to just to see how much buying or selling pressure there is. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 58 points. Trade out at 15,483. S&P off 4 at 1681. Composite up 7 points at 3586. Russell 2000 down 2.5 at 1041. Google down 7. Apple down 15 cents right now. Microsoft back 44 ticks. Intel off 3. Cisco down 6 pennies. A leader in the clubhouse to the upside is Baidu up $18 and change. TripAdvisor up $9. F5 up $7.50. Facebook up $7. Visa up 7.5. LinkedIn up 6. To the downside, Google leading the charge off $7.50. Siemens, that's what it is. SI was Siemens. They're taking it in the shorts this morning, down 7% and $7. Equinix off $8, down 3.5%. Western Digital Corp off $5, about 7% as well. Crocs taking it in the shorts, down 23% right now. That's off $3.90. Angie's List down 10%, off $2.50 or so. Our call-in number, 877-927-6648. Under Armour here, trying to take out its most recent swing point high from May 22nd, so it is taking on that date. 2.5 million shares, so it will have no problem volume-wise. The top of that is 65.55. Right now, trading at 65.59. Done 404,000 shares already in the first 5 minutes of trading, so volume should not be a big thing. If, in fact, Under Armour takes out that swing point, that'll be a heck of a nice A to B equals CD up that it will be confirming. Your 8 point on this is going to be January 24th, 2013, the low of $47. And no, I take that back. The low is 46. Where is the low? 44.32. I'll get it right. 44.32. That'd be your A point. Your B point being May 22nd. 65.55. And the C point, kind of a shallow retracement. June 24th out there. So it shows some pretty decent strength. Probably if we go measure that retracement, it's like in the 0.382 range. Let's see. Yeah, just a little bit over 0.382. That says that what Under Armour, if it can take out May 22nd, it'll give you a confirmed A to B equals CD to 76.78, but I say more likely 82.59 out here. I'm imagining that's going to put it well past all-time highs. Let's pull this back. Oh, yeah, most certainly it is. So watch for Under Armour, see how that trades today, but setting up a very nice A to B, potentially setting up a nice A to B equals CD out there. Let's take a look at Siemens SI. That has pulled all the way back to the last time that it broke out, which was in the 103 range. Let's take a look at where the exact breakout took place, and that was at 103.02 on July 8th. Volume there, 838,000 shares. Not exactly like this is the most liquid of vehicles out here. Well, the bad news is it's come all the way to that breakout area in the first 7 minutes with 286,000 shares. So looks like Siemens will come all the way back down to the bottom of this little consolidation range that it has been in. It has been in this consolidation. Coming back, we'll draw the line on it here, and then we'll give you the date. It's been consolidating ever since September of 2012 out there. So it's got a range from, we'll call it $98 to the top is 110. So you got about a 12-point trading range, which is worth noting for sure. 12-point trading range inside of Siemens, especially as it gets down towards the bottom of that range, which is again is about $98, and it should be. It's already begun its move down there. Just be interested to see what the volume is as it makes that move. So that was on Siemens. Let's go take a look at Baidu out here. Baidu is really jumping to the upside here as the leader dollar-wise in the clubhouse. Let's see, it was in pre-market, it was right around 133.22. Looks like it may have come close to hitting that level. What Baidu is doing, it's running into its most recent swing point out here that takes you back into August of 2012, 133.96 to 130.12 out there. Looks like it hit the bottom of that, and it has begun to sell off. A good volume in it so far, 4 million shares out there inside Baidu. It should have really no problem taking on that swing point. It hasn't gotten up there yet. It's only maybe hit the bottom of it. If we take a look at any other significant turbulence in place out here, a little bit of supply line right here from the day of August 24th, 2012, 6.5 million shares out there. But Baidu, here with this big gap up, most certainly it's already completed the A to B equals CD. That's coming off of the lows out here. In fact, Baidu happens to be one of the stocks, as I was putting together my list of equities here for over the weekend. I was working on the workshop for this evening. Baidu just happened to be one that showed up as a buy all the way back down here. In fact, the tool that I'm going to be teaching tonight, it's really the coolest tool out there, and it's so easy, and you don't even have to have any technical skills out here. You don't. It is so easy to use. And then even Baidu happened to be one of the stocks that showed up on the list here. So maybe I'll have to update the chart with it making its move all the way up to the 1 to 2 A to B equals CD in that 129 range out here. But a nice move for sure inside Baidu. And that's a part of the reason that I developed this technique and created this technique that I'm going to be sharing this evening, is because there have been a number of stocks that have made it off the bottom, and I didn't pick up on it, and no other patterns that were out there didn't pick up on it. And I went back to say, something to think about. Not only something to think about, but like a little puzzle, and not so much I like to do those puzzles where they cut up the pieces, but I do like to figure out the puzzles in the marketplace. And I unlocked that code in order to be able to pick up those equities as they are coming in off of the bottoms out here. And Baidu was one of them as it was making its lows. Let's take a look here at Angie's List. I've never used Angie's List, but Angie's List right now is coming back to a breakout area. Had good volume, which was on April 25th, 7 million shares out there. Let's see here today, done 560,000 shares. So that's not so good. But maybe Angie's List, maybe the volume will start to fade on this thing, get all the way back to this breakout from April 24th. If not, and volume picks up, well, Angie's List will make it all the way down to the breakout from February 14th, Valentine's Day last year. That's got 7 million shares, and that range is going to be 1667 to about the 1394-ish type range out there. Let me see if there's any other areas of signs of strength. There are none. And if we take a look at coming retracement-wise, coming off of the low in Angie's List, which was October 24th, 2012, up to the most recent high. And, right now you really do have volume off of the high, so that's not a good thing. Your 0.618 level, that's going to take you to 1635. That's where that first breakout really began. So it looks like most likely that is where Angie's List is going to get down to. More likely the 0.786 retracement, which is right around the 1340, 1390 type level out there. Let's see what else we have here. Nothing like earnings central to be in full swing, because always lots of things to take a look at. We're going to go take a look at Dave's for our man David White, Polar in the Den Power Law Vector Indicator. Let's go see what Dave's is doing out here. Where is Dave's? What the heck happened here? Let me refresh my screen. I thought that was going to gap up this morning. Maybe not. 1689. Is it trading at 1680? Yeah, today's July 25th. Oh, well. Some folks were bidding up for sure. It was trading at 1709 in the pre-market there. Just right now it's 1608. So Dave's not really doing a whole lot. We won't spend a lot of time on that equity. How about Hog? How about Harley Davidson? Let's go see what it is doing. Having a nice morning here. Let's go see what kind of volume is behind this move out here as it takes out its B point. The B point being July 2nd. Let's see, the high 56.13, 56.14 on July 1st. We'll use that. 1.8 million shares out there. No problem taking that out today. Already 380,000 shares. This is going to head to its swing point. It'll get there very quick, which was May 20th. That level's 59.84 to 59.04. Only a million shares up there, so it looks like it's going to take out that level. That sets up a potentially a very large A to B equals CD up here. This is on Harley Davidson, the Hog out here. It looks like it's been traveling in a rising price channel out here. So we'll see where that ends up. But if it does take out the small A to B equals CD here, inside Hog, you'd come off of the June 24th low. You'd take it all the way up to July 1st and then down. Only a shallow retracement to July 10th. So that says Hog would trade up to the 62.25, 64, 67 type range. Is probably an expansion of the swing points here, which would be your May 20th level down to June 24th. Let's see here. So yeah, Hog should trade up into about the $63 range out here. Right now, it is trading at $59.22. So a nice move behind the Hog out there. Let's see what else we got. Equinix, EQIX, gapping down this morning. This thing here, let me get rid of the pre-market lines that I put on my charts out here. So down with a volume of 606,000 shares. It had recently broken out with 2.2 million shares, so down below that level. That says that what you ought to see in Equinix, EQIX, is a move down to June 24th, only a million shares there. The top of that is 178.33, so if it gets down to that swing point today, it's already got volume behind the move. We'll see where this one, and the reason why that's going to be key is because that's a large A to B equals CD down. If it gets down into that June 24th area, it does it with volume and takes it out. That's a big A to B equals CD down. So this is one we want to come back and really pay attention to, because your A point is 231.56, your B point June 24th, and your C point was July 18th, and your 1-to-1 was 146.87, but I suspect it would actually be a little bit of a move lower out here. Yeah, so it'll come back. Well, the area where it should come back to is this breakout, which was tested back in April of 2012, April 26, 5 million shares the upside. So it should come back into about the one. This one says 147 range, and 146.64 is your A to B equals CD down in the market. Now, I mentioned light sweet crude earlier, so I'm going to switch over. We'll take a look at some of the commodities. Let's go see what is going on here in light sweet crude. We know we've got that 14-point consolidated trading range that it broke out of, which gives you a price projection of the 104 area. Now, it's also made, 1 to 1.272 A to B equals CD, a little bit beyond that on the continuous contract. But if we do take a look at that possible retracement, but it also did give us the bearish signals here. And the bearish signals that it gave us this three-river evening star pattern right here, which was between the July 18th, July 19th, and July 22nd session. And then we had a bearish engulfing candle because we still had a trend that was up. That bearish engulfing candle was yesterday out there. So this says here that light sweet crude ought to pull back to the $100 0.26. That would be your 0.382 retracement level. Now, that would be a normal move in this move up. Now, the cool thing about that, so now that we have that figured out, I'm going to go ahead and get rid of the A to B equals CD up here, is that what this has done is it's broken through the consolidation level. And oftentimes when you break a consolidation area, price will move back and test it. Now, what you want to be paying attention to on light sweet crude is what happens if, in fact, this pattern continues its retracement down, and it gets back into about the $99.50 area. If it gets down there, comes back in on light volume, tags that level, gives you a bullish candle, then it's off to the races, because then it's going to just simply be setting up its consolidation level to the upside, which will take it somewhere between the $95 or $99 range to $114 out there. So I wouldn't necessarily jump on the short side of this trade here just yet. I would instead be waiting for the potential long setup here in light sweet crude. But it has given us some signals that it does want to pull back. If we go take a look at Goldilocks and silver out here, see what gold is doing right now, trading out at 13.24. Well, this is the 120-minute chart of gold. Let's go put the daily chart up on our screen for us and see what gold has been doing. Right now, trading back at the swing point low of April the 16th. That number was 13.2150. You're just slightly above it. So it has come back and it has tested that. The question is, now, we did get a reversal sign yesterday. It wasn't a key reversal session. The high was 13.4870. It was a key reversal session, but it wasn't totally extended. So gold was somewhat extended, but I wouldn't say utilizing the relative strength, which I really like to do out there, wasn't so much extended that that key reverse that even though we had the high equal to or exceeding the prior day's candle, both high and low, and then we had a finish to the downside. It just wasn't extended enough for me. So instead, we did have a bearish engulfing candle, which is still in effect here. So where can gold pull back to? Well, if we just take a look at coming off of the low to the high that was put in yesterday or the day before, your dead cat bounce is 12.84. So that is certainly very much game out there. 12.44 is also another possibility, but figure somewhere right in that range probably is where gold would like to head to. That first target that you're going to have to watch is 12.84 out there. Let's go take a look at silver, see what silver is doing here. You've got silver just trading sideways. Now, we didn't get the bearish signs. So silver, which has been weaker than gold, we didn't get the bearish signs here in silver. Silver is pulling back. Maybe what silver is going to do is just come back into the let's see here. Where is it going to come back to? Maybe just simply come back into the lows here from June 21st, maybe about the 1931 to 2010 range here. So not doing a lot, just having a sideways day out there, but it did not give the reversal sign that gold did, or the sign that it wants to pull back a little bit further. Candle-wise, we're talking. Now, if we take a look at bonds here, bonds really just not doing much. Well, what bonds are signaling is that they don't want to move higher. Bonds were not able to, or have not been able to, get out of the July 5th candle out there. It was came close to testing, or maybe it did test the high of $136 even Steven. Let's see, it got up to 130. What was it, 130? Yeah, it got up to 136. Never was able to get above this candle out here. That's what was needed in order for this thing to get bullish. But bonds, just simply, I don't see anything here in a trade. Maybe if you wanted to trade it, let it get down to the 132.02 level. But that trading range is so tight. I say look elsewhere, my friend. 877-927-6648. Dow's off 46. S&P is off about 2. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 46 right now. S&P down 1. Buying or selling opportunity? That is the question out there now. Right now, the New York Stock Exchange only off about 10 points here, but down 200 net declining issues. And the number, the benchmark, the bar that the New York Stock Exchange needs to hit in order to truly give the ball to the bears is only 275 net declining issues today. I think right now, we know what the market is doing is what it's supposed to be doing, which is working off that oversold condition that we saw coming into that 5, 6 o'clock in the morning time frame out here. So, at this stage here, actually, I'm thinking it's more of a selling opportunity. Not just yet here. Let this bounce unfold. See if we can get that relative strength indicator to get up towards that 70 level. Just anyway, it probably won't hit 70, but somewhere very close to it. Maybe it's right around 65, 67, something like that. Right now you're at 55, so it can certainly move a bit higher. We know there's some resistance right up here at the 1684 type range, so the A to B equals CD down. That still is in play out here, and the market really just doing what it should normally be doing as you take a look at that EKG of the system out here. The one thing we do have to be cognizant of, there's no question about it, is the fact that when you break a trend line, just we were taking a look at whether it's sideways, horizontal, so whether it's consolidation ranges, whether it's rising price channels out here, is that when those get broken, they will they oftentimes get tested. I really thought that what we were going to see was that test was going to take place overnight, around 2-3 in the morning or so, and then we would start to see the sell-off. That didn't take place out there, but and it doesn't mean it's going to happen. It just there's a high probability for that to occur out here. As we take a look here at some of the sectors inside the S&P 500, let's peek around here. Let's look at the financial sector. The financial sector is trading out right now at 2058. This actually gave us a 1.272 butterfly sell. You'll see it says 1.33 on my system. That is close enough. And right now what the financial sector is going to do, it's going to head down to May 22nd where it's going to release a piece of information to us. Now there's 95 million shares at that candle. So we got above that level. So it's really a butterfly, a tiger butterfly pattern inside the financials as it made its move above that X point on lighter volume out there. Let's see, on the B point, let's see, at 59 million shares. So it didn't qualify. It did get above the B point on July 9th with more volume than that B point out there. In any event, we did get a reversal signal these last 2 days inside the financials. That is important because of its weighting inside of the S&P 500. So an area of strength has now shown weakness. This is the most interesting of all the charts out here, which is the energy sector, because this thing really came down yesterday. Volume-wise, it most certainly accelerated. You had 9.3 million shares. All this did was get back into the May 22nd area, 83.95 out here. I looked at it all day long to say, is this a place that I want to go ahead and take a short? You did a nice test of May 22nd on light volume, 6 million shares. And the only thing that kept me out of it at this stage was this right here, was ExxonMobil. If I pull this up here, let me see if this is on my screen here. Do I got ExxonMobil? Yeah, it is this, and because ExxonMobil is such a heavy weighting inside of the energy sector here, and ExxonMobil has broken a $7 trading range here, and did it with volume. It gapped up, did 10 million shares as it was taking out 16 million shares, as it was taking out 15 million shares out here, as it was taking out 15 million shares from October the 9th. 19th, 2012. So it's up and over the consolidation area on lighter volume. But what I want to see is the test. I want to see what ExxonMobil does as it comes back and it tests this level, which it doesn't have that much further to go to get and do that test. You're only looking at it getting down to about 93.50 or so, 93.70. It's at 94.80. Man, time flies. Folks, have a great Thursday. Stay tuned for the next hour of the Money Masters. If you're off to start your day, have a great one, and I look forward to seeing you tomorrow morning. Take care. Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.